tax implications for CFD and Forex traders. In fact, these tax implications could come into place, I'm assuming, at some point next year for anyone who has assets which would normally attract some form of capital gains tax relief. So if you are a trader and you trade stocks, CFDs, Forex, anything outside of spread betting, then normally, and it does vary depending on your personal tax status, you'd be looking to pay capital gains tax. So this video is all about people who live in the UK. For our overseas viewers, then this is pretty much irrelevant to you. But there are some rumours that the government are looking to reduce the tax-free allowance from 12,300. So you for CFD Forex traders, then you do pay tax, but you don't pay tax on the first 12,300 as it currently stands. So until you've made profits in excess of £12,300, then you're trading tax-free, whether you're trading on CFDs or Forex anyway. So, but what we've just heard in the last few days is that the government are potentially going to reduce that allowance down to 2,000. Okay, so you're going to start paying tax as soon as you breach 2,000. So what does this actually mean to you? So let's actually go through this. What does this actually mean? So someone who is consistently making, above £12,300 a year, what is it going to mean to them initially? Well, by it dropping to 2,000, that means that they're going to be taxed on. The difference is going to be between the tax difference between 2,000 and 12,300, which comes out at 10,100. So then they're going to be taxed at either 20% or 40%, depending on their personal tax allowance. And bear with me on this. If I make any mistakes, don't crucify me. I'm not an accountant. But anyway, so they will be paying tax based on that. So 20% of 10,100 is what, 2020? Is that right? Let's forget this. Yeah, 2020, I think it is. And if you're a 40% higher tax rate payer, then it would therefore be 4,040. So that's the difference. That's how much more someone who's a higher rate taxpayer is going to be paying. So let's assume you've got £200,000 in a trading account, and so therefore you would regularly be making more than your tax-free allowance anyway. And don't worry, I'm well aware that many people who might have 200,000 might already be using up their capital gains tax allowances elsewhere anyway. But let's just go with this first of all. So if they were utilising their capital gains tax allowance, then they would, the difference now, or if this comes in, will be that they will be paying an extra 4,040. Okay, if they are a lower tax rate payer, then they would be paying an extra 2,020. Based on if they were making anything beyond 12,300 every year. So that's what it's going to cost them extra, more than they were paying anyway. Okay, so you can make an argument, I can certainly make an argument that, okay, it's not nice, no one wants to pay more tax, but it's not the end of the world either. It's not horrific. So when you're trading with a larger account. However, what about if you are trading with a smaller account? So let's actually look at someone who's got, let's say, £5,000 in a trading account. Okay, so if you've got £5,000 in a CFD trading account, what's the tax implications for you? Again, you've still got the first 2,000, which is tax-free. Okay, so let's assume on a £5,000 account you make 50% in a year. Okay, so you're making 2,500. The tax-free allowance is 2,000, which means you're going to have a taxable liability based on that extra £500 at either 20%, which means you're going to be paying an extra £100 in tax, or 40%, then you're going to be paying £200. Okay, so again, it's not the end of the world when you come if you're either down at the lower end of the range or at the higher end of the range. No one wants to pay tax, and so of course there is an option, and we'll talk about that in a moment. No one wants to pay more tax than they already do, but it's not huge. Now, obviously, I'm basing this on a £5,000 account making 50% in a year. So, but what if you make 100% in a year? Well, okay, so then you can work out what the tax liability is. Where I think that it really comes into play, if I just take the pen off again, is more maybe on someone who's got, let's say, £20,000 or £30,000 in a trading account, in a CFD trading account. So let's have a look at that. So you've got £20,000 in a trading account, and again, let's do the same calculation. Let's say that you make in 50% in a year. So previous to this potential change, this isn't in yet, and it wouldn't come in until well into next year because they'd have to announce it in a budget. But so I'd say as a minimum of next year, but I'm sure that's what they're probably going to do. So if you make 50,000, so therefore you've made 10,000 in profit. Okay. So now, so in the past, up until now, you wouldn't be paying any tax on that, no tax at all. But now, under the new rules, well, the taxable allowance has dropped right down to 2,000. So you've got a taxable liability based on 8,000. And again, we can look at either at 20% or 40%. So now they are paying, what's that, 1,600 as a lower rate taxpayer. As a higher rate taxpayer, they're 40%. They're going to be paying, what's that, 3,200. Okay, and I think it's this sort of bracket of trader who might have 20 or 30,000 or 40,000, whereas in the past they were either still not paying any tax or a low amount of tax, because remember, you can have accounts in both your name and your partner's name, husband, wife, whatever. So it was actually quite an easy way to trade with CFDs, Forex, and still be utilising your tax-free allowances. So, but now all of a sudden, because that allowance has come down so much, then there is that bit more of a liability that those traders weren't having before. That sort of mid-range sort of trader who's got 20, 30,000 or so. Now, of course, you can still split your accounts, so you've got yours and your wife's or husband's or partner's, and be trading out of two accounts. So then you're still splitting the the 2,000 tax-free allowance, of course, or, and we're getting there, aren't we? Or you switch to spread betting at some point in the future, if that happens. So, and again, for the people who have got a lot more money, I don't think it's really going to make much difference. The difference of what they're already paying in tax is just an extra £4,000 most likely. But it is that mid-range where all of a sudden they weren't paying tax or very little, and now they're going to be paying, I'm now paying 3,200 or whatever it might be. So, and so that's where spread betting comes in, and so it might be a consideration going into next year to look at spread betting if this comes in. If it's not guaranteed, but it is. Once they start talking about these things, you think, there's probably something gonna happen there. So that could be a consideration. Obviously, it's always worthwhile speaking to your own accountant and getting their advice properly on your own personal tax affairs. But I think if you're trading a very small account, it's really not going to make much difference to you. It's only once you start of at 20,000 or so, and remember, you can split that. If you are trading with 20,000, you could still split that into two accounts of 10,000, yours and your partner's, and still mitigate and at least spread the tax. But if you're already utilising your capital gains tax allowance anyway, then you would be paying tax on any profits from your trading activities. So that again, then potentially spread betting comes into place. Now, there are fors and against with spread betting. Spread betting, I think if you're with a really good Forex slash CFD broker, you'll get generally better execution. That does add up as you go through the year. That there will be trades that you'll just get nicked out of on a spread bet, but you might not on another type of account, and that does add up. The difference between having a losing trade where you've lost £300, whereas actually it made you £600 on a different account because you didn't get stopped. That difference, that swing of 900, is going to add up. You get a few of those going on through the year, and all of a sudden, your tax liability is offsetted. The fact that your spread betting might be tax free, but you've made a lot more on your other accounts. So there are other considerations, but certainly spread betting will be for many of you something to consider, as and when. At the moment, I wouldn't panic. I wouldn't worry about it. Carry on trading as you are, because it's just the rumours at the moment, and they will give notice as and when that happens. So I wouldn't really be too concerned right now, but it's just something that I thought that I would do a video on to give you some ideas of sort of tax liabilities depending on your sort of accounts that you might be trading with, and whether you want to switch. Would I switch? No, I don't trade spread betting anyway personally, so it will just mean that my tax bill will go up a little bit, but I do appreciate people with other accounts might have different considerations. So there you go. That's Friday's video. Hopefully that has been some useful for you this weekend. I shall be back in touch with you next week. Take care for now.